Welcome to today's webinar, where we're going to explore the crucial role that financial institutions play in driving the global transition to a low-carbon economy. As regulations tighten, stakeholder expectations increase, and voluntary ESG commitments rise, institutions are under growing pressure to reduce their own emissions and to ensure that their portfolios are not just decarbonised, but more broadly sustainable. Today, we're going to dive into how a solution we all know as book and claim can not only be used to reduce Scope 3 emissions for the sector, but to demonstrate the long-term demand for fuels and materials that are sustainable and that are essential for attracting investment. Zooming out, we'll also consider how institutions can be supported to direct investments towards the most sustainable and promising solutions sorely needed to combat the climate and planetary crises. My name is Hannah Walker. I am RSB's Deputy Executive Director, and I'm proud to warmly welcome you to this webinar, which we hope will be the starting point for many further engagements as we work to scale a truly just and sustainable biocircular economy to tackle that climate crisis. On the agenda today, we're going to hear from experts and leaders in sustainability, bioeconomy, book and claim, and beyond. First, Elena Schmidt, RSB's Executive Director, is going to set the scene for the important role the finance sector must play in the sustainable transition, why greater insight on sustainability and standards is needed, and how it can unlock opportunities for impactful investment. Next, Tim Thompson, who's CFO of Charm Industrial, is going to dig into more details on the roles and opportunities for the finance sector to engage in sustainable decarbonisation, helping us to then zoom in to book and claim. Bill Alker, who is RSB's Book and Claim Program Manager, will then take the reins to showcase how the book and claim solution has been crafted to enable credible Scope 3 emission reductions as part of an ecosystem built on good governance, traceability, transparency, independence, and meaningful stakeholder engagement. Next, we'll have a look at how a methodology and verification system built on book and claim can demonstrate bankable demand signals in sustainable aviation fuel transactions to stimulate investment. Here you're going to be hearing from World Energy, who are a leading SAF producer, and their VP of Sustainability, Adam Klauber. The exciting agenda doesn't end there. We're then going to dive in deeper on the aviation sector with FE Global's Chief Investment Officer, Liam Chung. Liam is going to lay out the role of the finance sector in scaling SAF. And then finally, RSB's Max Eichelbaum is going to show you the book and claim registry in action with a live demo and show how it can be used by corporate end users. Tim will then wrap things up with some concrete next steps for further engagement. If you have any questions during any of the sessions, please use the Q&A function. Our team is going to do our best to be answering in that box during the session. But with an hour on the clock and a lot to cover, I'm very pleased to hand over to Elena Schmidt to get us started. Elena, over to you.
Thank you, Hannah. We are excited to welcome our distinguished speakers today and so many participants. Your numerous presence today reflects the strong interest in the topic that we are about to discuss today. Finance institutions are crucial in accelerating the development, the growth, and scale of a sustainable and low-carbon economy. The extent of climate risks for finance institutions on the one hand, and their influence on the global economy's transformation on the other hand is increasingly recognized. Stricter regulations, growing stakeholder scrutiny, and voluntary ESG commitments require those institutions to thoroughly assess the sustainability of their investments. Public and corporate commitments on decarbonization targets are massive, and so is the urgent need for investment to deliver on those targets. Now, looking at the finance sector, the trillion-dollar question is, how can finance institutions direct their investment, lending, and other activities towards those feedstock, fuel, and material developments, products, and operations that can create positive sustainability impacts, and thereby unlocking the transition that we need to mitigate this triple planetary crisis, consisting of the climate crisis, pollution, and the destruction of ecosystems? Today, we'll try to find answers to this question. We will look at credible and trusted sustainability standards that are globally accepted by stakeholders across industry, NGOs, and academia, and that are needed as a foundation to consistently assess sustainability risks and create positive impacts through investment. At RSB, we are proud of the sustainability framework and solutions that we built together with our members and stakeholder community around the world, and that now serve as the sustainability compass to scale the sustainable decarbonization at a pace that we need to address this triple planetary crisis. We will explore the challenge of Scope 3 emissions and financial portfolios. Understanding and addressing these emissions is crucial for finance institutions to lead decarbonization efforts. And as Hannah said, we will discuss how book and claim works and how it can support the signaling of long-term demands to the finance sector. Again, a warm welcome to all of you. And without further ado, I'll introduce your first speaker, Tim Thompson, who is the CFO at Charm Industrial, and he serves at the RSB board as our Sustainable Finance Director. Over to you, Tim. The floor is yours.
Great. I'm excited to chat about this topic to you all. To set the stage, I don't think it's a surprise to anyone when I say that the carbon transition is going to cost $1 trillion on unproven technologies. This is meeting head on with the fact that there has been deteriorating trust in the markets. Carbon measurement of new technology has been a debate, and venture capital is drying up. These factors are exactly why exploring mechanisms to pull more traditional financial institutions into this market as early as possible is critical. Financial institutions have built their reputations on capital provisioning, in addition to creating transparent markets out of complicated transactions. The problem statement for the carbon transition falls directly in line with the core competency of these financial entities. Separately, as these types of complicated markets ramp up, we've seen less favorable development behaviors that may not always consider the social or tangential impacts of these rapid expansions. Setting up accountability early around this topic will also be critical to the long-term success of the carbon transition. The chasm that must be crossed is creating pathways to de-risk the funding in inherently risky financing projects. One such pathway that is starting to mature revolves around book and claim systems. The area where we've seen this take off the most is around sustainable aviation fuel. So I'll use that as a foundational example. Effectively decoupling the environmental Scope 3 benefits to a buyer helps reduce the green premium for purchasing more environmentally friendly products like SAF, while creating additional revenue streams for the supplier to help increase collateralization of future projects. What's particularly exciting is that this mechanism does not necessarily have to be exclusive to either SAF or to the carbon benefit. The pretenses and structures of this market can be used to reward other materials, so things like low carbon concrete, in addition to socially just behaviors if there are buyers excited to mitigate things like water usage, create new jobs, or help subsidize rural development. Crafting this ecosystem helps provide incremental revenue streams that help securitize future projects, as well as reduce the overall green premium in specific material transitions. Groups like RSB play a critical role in cultivating the trust within these future markets, while financial institutions can play a critical role in funding against these transactions, managing these transactions, and even serving as buyers of these claims in these transactions. I'll pause there and I'll turn it over to a video to give a concrete example of what successful implementation of these markets can look like to help set the stage for the upcoming speakers who will dive in the topic more holistically.
Sustainable aviation fuel, or SAF, is the aviation industry's biggest opportunity to reduce its carbon emissions. While demand for SAF is growing quickly, today it's only accessible in limited locations. But there's a smart system that allows airlines to support the growth of SAF when they are not able to purchase it physically. It's called Book and Claim, and here's how it works. Let's say an airline wants to purchase SAF at an airport in one country, but SAF isn't yet available locally. With a Book and Claim system, the sustainability benefit can be decoupled from the physical fuel. This means that an airline can purchase SAF and claim its environmental benefits while physically fueling its aircraft with the conventional jet fuel that is locally available. Book and Claim helps airlines to reduce their emissions while supporting the growth of SAF supply around the world. This chain of custody approach has been tried and tested in many other supply chains, like renewable electricity, and ensures that sustainability claims are not double counted. Businesses can also use the same approach. By supporting the purchase of SAF via Book and Claim for their corporate travel, they can lower their air travel and cargo emissions across multiple routes. But for this approach to have real impact, it requires a system that is robust and independently verified. This is why the Roundtable on Sustainable Biomaterials has worked extensively with stakeholders around the world to develop a rigorous Book and Claim system and rules to certify SAF transactions and support airlines and corporations to go beyond carbon offsetting and mobilize real change in the aviation sector. The switch to SAF marks a moment in time where we can choose to innovate aviation for good and fuel a brighter future in flight. To learn more about how you can use Book and Claim, visit our website.
Thank you so much to Tim and also to Eleanor for that wonderful introduction. Now that we've learned a bit about the role of Book and Claim in scaling sustainable fuels and materials too, I am really pleased to hand over to Jill Alker to dive in a bit deeper on how the system is used for credible Scope 3 emission reductions. Over to you, Jill.
Thanks, Hannah. Thank you to Tim for the introduction. I'm Jill Alker. As Hannah said, I'm the Book and Claim Manager, and I'm going to just spend the next few moments providing a bit more detail on how the Book and Claim system works. So here's that simplified diagram again that Tim showed you a few minutes ago. In this diagram, we have two supply chains. On the right is a conventional jet fuel supply chain, where there is a demand for low carbon fuel from an airline and a corporate, but no physical supply of SAF. Then on the left, we have a supply chain that does include a supply of SAF, but there is no demand, or the demand has already been met. Rather than physically transporting the SAF from one supply chain to the other and increasing the costs and emissions associated with that fuel, a registry is used to transfer the sustainability benefits of the SAF without transferring the fuel itself. So while the physical SAF will travel all the way down the supply chain on the left, its sustainability attributes will flow part the way down to the SAF supplier, through the registry, and then to the airline and the corporate on the right to meet their demands. The physical SAF is supplied without any sustainability claims, and the airline and the customer on the left are unable to make any claims resulting from the use of the SAF in the fuel tanks. But instead, those claims are made by the airline and the corporate on the right, even though they may not have flown on SAF, because they own the Book and Claim units that have been acquired from the SAF supplier. This approach means that those companies that have made firm climate commitments but have limited influence over their supply chains can still send strong signals to the market that they're ready and willing to invest in accelerating change. This is why insetting solutions like Book and Claim are so powerful, and organisations such as SBTI are softening to their use because they have huge potential to make significant change. Provided this is all done in a transparent and robust way, the claims do demonstrate genuine additional climate and sustainability benefits. But RSB's Book and Claim programme is more than just a registry. The programme as a whole is a framework on which reliability and trust has been built over time. The programme consists of the Book and Claim system, which is the box that's represented in the centre of this slide, and the system comprises of the registry, which is the database, the Book and Claim manual, which is the normative procedure that describes the functioning and rules of the Book and Claim system, and a recognition procedure, which is another normative document that describes the process by which other registries can be recognised by RSB. Importantly, the RSB book and claim system doesn't involve any commercial transactions. All the commercial arrangements are carried out independently between the system users. And the system is just purely a chain of custody tracking system. And also importantly, the book and claim system is underpinned by robust sustainability certification to ensure that any fuel that's tracked through the registry fulfills not just the sustainability requirements for the fuel, but also the rules that are associated with the manual and the registry. And this ensures that double counting of sustainability claims is independently verified and the whole process right through to the claim has been certified. The system has been developed over time and continues to be improved and validated through a series of pilot projects with our member organisations and through consultations through our book and claim members who represent 73 organisations. We're currently expanding the system to allow it to work with sustainable marine fuels, and we've recently completed a stakeholder consultation to gather the maritime industry's views on how this should work. In the future, we hope the system will be expanded to other sectors such as steel, concrete, and bioplastic. So I'd just like to introduce, well, let's see if it works first of all. I'd like to just spend the next few minutes talking about trustworthiness in book and claim, which is obviously incredibly important if the approach is to be widely adopted. We believe that trust has to be built up in layers, and at the core of RSB's book and claim system is the registry. And as you've seen, the registry has been built over time with testing and pilots and alignment with other initiatives. We've built in immune traceability and security, and the whole system is subject to third-party auditing. Retirement statements showing the sustainability attributes of the fuel are publicly available for anyone to view on the website. On top of the registry sits the manual, which is subject as well to independent assessment. It defines the registry's fundamental rules, such as our approach to avoiding double counting, our stance on additionality, and these rules must be adhered to or access to the registry will be withdrawn. These rules have also been developed through collaboration and testing using pilots, and they are transparent and publicly accessible. On top of this sits certification. Our standards are publicly available, as are the list of participating operators that hold the certificate. The standards cover a wide scope and are broadly risk-based. Once again, they've been developed through stakeholder engagement and consensus and are continuously improved and updated. And importantly, their application is verified using third-party auditing. The final layer is governance. Governance provides the bedrock on which trust is built. And we believe that it's vitally important to ensure that all 5 of these pillars, collaboration, transparency, consensus building, balancing of diverse interests, and independent validation, run right through all the elements of book and claim, right up to the governance structure to ensure that trust in book and claim is built and maintained. So with that, thank you all for listening, and I'll hand you back to Hannah.
Thank you so much, Jill. I'm also delighted that the animation worked. We see that book and claim offers a really elegant solution to scaling SAF and other fuels and materials. But the potential doesn't end there. I'm really pleased to welcome Adam Kleiber, who's not only the VP of Sustainability and Digital Supply Chain at World Energy, but also chair of the RSB Board of Directors, to talk about an exciting project that World Energy and RSB are working on together to demonstrate verifiable demand signals to investors. Adam, over to you.
Thank you, Hannah. So a little bit about World Energy. So sure we've got the, we're going to need the view so we get the full screen. So
we see your full screen.
You can see my full screen. Fantastic. So World Energy, my company, is a renewable fuels developer, and we've helped to pioneer book and claim transactions. We are most interested in figuring out how do you cover the price premium in a hard to abate sector. And we operate the first sustainable aviation fuel plant at commercial scale. It started in 2016 in California. I'm very proud of our certification. It's an RSB certified facility. And we also are developing a clean hydrogen project at a massive scale off of the coast of Newfoundland in Stevensville. And that will potentially supply energy for the steel industries and potentially data center processing. We realize that this is an expensive endeavor, and finance is a major component to our future success. And so we are looking to secure upwards of $15 billion of capital with the current 3 projects we're focusing on. That also includes a new sustainable aviation fuel plant in Houston. And we have to convince banks and investors that what we're doing addresses the risks and is truly scalable. And so this is why demand signal recognition is really important to us. So with that, go to the next slide. So often in the harder to abate sectors, there's a question about chicken and egg. What comes first? Can we actually build the plants and then there'll be demand? Or do we first need the willingness to pay in order to show the lenders and the investors that there truly is money coming in that will cover price premiums? Harder to abate is another way of saying more expensive than conventional energy. And so we need to figure out ways to address this chicken and egg problem. And we do believe that demand signal recognition is a very strong way to do it. And I'll share more about what that entails and why we're excited to work with RSB on this. This is from Bloomberg, this graphic here, and it's been modified for fuels from a renewable electricity perspective. You can see that the banker's perspective is all about managing risk, and there's a lot when it comes to hard to abate sectors. So not only do we have the technology risk, we also have the standard risks for any project that includes on the front end permitting, the cost overruns from the construction, the cost overruns potentially from the operations. The one risk that we're talking about addressing today is the offtake risk, the way to address the potential merchant flows or revenue that come in from contracts and potentially spot purchases. And so this is something that we believe that RSB is well positioned to provide an innovation that will really help to scale this industry. So let's talk about a demand signal. Demand signal, as I mentioned earlier, is all about the willingness to pay. And in a hard to abate sector, the users of the energy may not be equipped to cover the full price premium. In the case of aviation, for example, airlines commonly have a profit margin of about 4% or so. And we know that sustainable aviation fuels far exceeds their margins. And any airline that acted independently of their competition to dive deep into the high cost of sustainable aviation fuels puts themselves at risk. So what we need to do is increase the involvement of customers, and we need to engage with them on their willingness to pay. So is there a way to help support the airlines and to also leverage the creditworthiness of different firms that might be the airline's customers? And this can be made possible through book and claim. And is there a way then to contract around this to make this more formal, so it's not just about spot purchases or purchases for your emissions reductions for a single year? So with that contracting with RSB, we've identified 4 principal areas. We also have recently started a conversation with a major accounting firm that will help to deepen the areas of coverage. But to start with, more than anything, duration is key. And so ideally, you'd have offtake that span the full asset lifespan. So this is a challenge, because you can imagine companies who are not necessarily buyers of fuels or sustainable aviation fuel would go long on a commitment to potentially cover emissions reductions over time. This is really important because otherwise the producers and developers are looking every year trying to scramble to cover these costs, and the banks are not convinced unless there is that long commitment to buy the fuel. Another important component of the demand signal and the contracting is having a binding agreement. So this commitment means that in spite of what may happen on a day-to-day basis or being exposed to the markets, that there are customers who are willing to pay the premium, and that we often talk about a take or pay provision, which requires the customers to purchase the fuel and to take the credits in the case of book and claim, or to cover those and to resell it to another party. This is a key component to the contracts to ensure that they really are bankable. Another important component is pricing risk. In new markets, there are fluctuating costs. We're exposed potentially to changes in commodity pricing, such as jet fuel. Government policy may change where incentives that maybe at a certain level from one month may switch to another level, or the regulators may decide to stop policies or introduce them. This creates uncertainty, and whenever there's uncertainty, banks then will take note and price the cost of capital at a higher price point. And then lastly, the counterparty is essential here. And I've mentioned the potential for contracting with the end user. This is a really important dynamic that has helped to advance wind and solar for the renewable electricity market, and likewise is very promising for sustainable fuels as well, where the end customer who has scope 3 indirect emissions can cover their emissions, and they may be subject to different market forces operating under higher profit margins. And you can see from the slide a few of the sectors where this is the case, and they can then help the airlines cover these cost premiums. So we're looking at a standard that will provide the guidance or the components that are necessary for banks to see that the risk has been addressed, so that offtake risk is lower, and then the banks and investors can offer capital at competitive rates, as opposed to the premiums that World Energy has often seen. So why would the different players in the ecosystem want to do this? So one of the major challenges around any market-based mechanism is the demonstration of what's known as additionality. Additionality is the but-for measure that shows an action has occurred that otherwise would not have happened. And if you have a long-term commitment, you can then demonstrate the potential for new investment or capital that's being provided at favorable rates that will enable new construction and more facilities, which by definition is additional. So long-term contracts that are binding support a form of additionality and can address questions about this. For buyers, there's a question of how do they engage with energy transition? It's a term that's used and in some ways right to new renewable alternatives. And the best way to do that is through these commitments that will unlock new investments. So this is an area of potential growth in the future, but the demand signal here is another claim that a corporation or a buyer can make, showing that not only are they addressing their emissions today, they have a long-term commitment to energy transition. From a producer standpoint, it's almost all upside. So longer-term contracts frees up developers to move resources from selling into more new investments and plans, and accelerating the potential for new sites and an added capacity, which is a sweet spot and an area that's more efficient for a developer to focus on. And additionally, the lower cost of capital, because of the offtake risk being addressed, will enable the producer developer to offer their price at a competitive rate, but also to pass on those savings to their customers, which lowers the cost in hard to abate sectors. And why might banks care about this? Because it will make due diligence far more efficient, especially if we can utilize a financial audit as part of the evaluation for demand signal recognition. So instead of having to do one-offs and tailor-made assessments for each different investment, they can check a checklist for what components of the offtake are addressed, and therefore streamline their offtake risk assessment. And then as a side benefit, as Ellen had mentioned earlier, these banks and investors will be able to decarbonize their portfolios more effectively because these investments and loans are more viable in the marketplace with a lower cost of capital. And ultimately, they can address their Scope 3 Category 15 emissions through their engagements and their portfolio. So lots of strong reasons to support the demand signal recognition, and it's an honor to work with the RSB team in helping to pioneer this new standard. With that, I will pass it back over.
Thank you so much, Adam, for that fantastic overview of the chicken and egg when it comes to financing plants and the key elements of a demand signal, and how this new recognition approach we hope will unlock capital at favorable rates and ease some of those challenges. Now, let's dig in for a moment a little further specifically on sustainable aviation fuel, which has really been a lighthouse in the global bioeconomy transition. And we're going to dive into the role of the finance sector there. So helping to demystify things, Liam Chung, who's the Chief Investment Officer at FE Global, is going to take us on a journey through the finance looking glass to understand the role and opportunities for the sector in scaling SAF. Liam, over to you. I'm not sure if we can hear you, Liam.
Oh, well, then I'll repeat
there we
everything
go.
that
Now
I
we
just
can
said.
hear you. Thank you.
So I'll repeat that. Thank you very much, Hannah, for having me here, and thank you. I was going to say, Adam, thank you for giving me an extra minute, but I think I used it with my technical issue here, so I'll take that back. So yes, Liam Chung from Future Energy Global. I'm the Chief Investment Officer, and Future Energy Global really helps our clients to participate in the scaling of SAF and biofuels in general by helping them get into transactions, whether it be spot, pre-purchases, or book and claim. And so my background, I'm very new to the sustainability industry. I'm really spent my first half of my career in capital markets, second half of my career in asset management, but particularly venture capital. But hopefully I can bring a little bit of a finance lens to what we've been seeing in our discussions with the participants in the space. And so I thought I would bring kind of two different case studies to put into focus some of the issues that we've been seeing really from a finance point of view. And so one thing one source of a lot of our conversations and our engagement with the ecosystem is that our DNA really comes from the aircraft leasing space, kind of dealing with asset leasing as an asset class, and so speaking with the various players, so the lessors themselves, the manufacturers, and of course the lessor financiers. And what's very interesting is to kind of dig in with them on what are their incentives to see SAF scale and to see SAF scale in a way that has a beneficial impact on them, and so or to reduce the risk of non-beneficial impacts to them. And so when the two primary risks that we've been discussing, or that has been identified to us from those players, is that there's price risk. And so, of course, we all want SAF to scale in a way that hopefully achieves the efficiencies to get pricing down. Today, SAF over the past year has been anywhere in between 2.5 times and 5 times the cost of jet fuel. And so, as Adam was mentioning, that premium represents a risk. And of course, we all want to see that premium decline. And for that, we need more investment. But the impact to the lessor space of that type of an increase, fuel is 30% of a ticket price. And if they have to spend 3 times more in premium, all else equal, that would mean a doubling of ticket prices, leading to lower demand, for aircraft, leading to lower demand for leases, and then ultimately lower returns in leasing as a complete asset class. On the other side of it, there's a recognition that doing nothing or not having SAF adoption is not an option, particularly because most of these lessor financiers, where the money comes from, typically comes from large players such as government pension plans, public sector pension plans, large banks that have to respond to constituents, and so they're all at risk of being deemed a dirty asset class. And this is a very lucrative asset class for many of these investment funds that would be very, very difficult to replace. And so everybody wants to see a world where SAF can scale in a way where airlines can remain competitive, where the industry can continue to grow without having pressures and sustainability issues that impact how the industry grows. So they have huge incentives to participate in SAF scaling. Now the problem is how. One of the biggest issues that we see, of course, is that these investment firms are highly segregated, and so the aircraft leasing folks who have all the incentive in the world to try and invest money and help SAF to grow, of course, are really pretty much fixed income investors. And most of the projects that we see today are in their pre-FID early stages. And so it is very difficult, aside from being able to say, hey, I really want these projects to succeed, and sending it down to Hull to the VC folks or to the project finance folks, where the incentives kind of taper off. The opportunities really only come from very much later stage projects. And so, I mean, I think as an industry, we need to try and find ways for this large pool of capital that has a very good incentive to participate in the scaling of SAF by providing capital. We need to find ways of providing them investments that they can invest in instead of having to rely on their friends down the hall. That goes a little bit to what Adam was saying in terms of having some ways of having standards, ways of being able to separate out the fixed income style risk from the technology and let's call them project style risk. And then there are other, maybe even more simple ways that they can participate where the risk does look a little bit more like a lessor risk, such as trade finance or financing pre-purchases of offtake, whether that be on a physical basis or even on a book and claim basis. And so there are huge opportunities, challenges, but other opportunities. Another challenge, and this actually I think is what Tim was alluding to earlier, that I've seen with some of these pre-FID projects, So when they're in the early stages of their development, what we tend to see on the cap tables, and this I've seen in other sectors, when you have technology risk and it's very early on in the sector, you tend to have a lot of what I'll call strategic investors. So those are investors that have an interest in the success of the project. And they tend to come in on the early stages. You can think of this as like kind of when you have a tech startup and its friends and family come in. They have an incentive outside of their financial incentive that the project works. But in these SAF projects, they have a very specific signature in that they have these offtake agreements. So these commitments for future purchases that are, on the one hand, essential for the future rounds of investment from the banks, and when they do go to FID, that they're able to get kind of that big project finance in place. So they're absolutely essential. However, one of the difficulties that I've seen in the term sheets that I've seen, and also in other industries, is that when strategics lead the round and they have these alternative incentives in the offtakes, very often the deals themselves do not stand up on a straight financial basis. And as Tim mentioned, we absolutely need to have more and more pure financial players come into this segment to put capital in, because we can't rely on the airlines and the manufacturers to always be the ones that put in those funds. And so while I think that at this early stage that these are fantastic, and we should be encouraging everybody who has an incentive to participate. But I think that very soon, again, as an industry, we need to reach out and get pure financial players, pure venture capital, PE, project finance players to come in. And to do that, I think that we're going to have to separate out how these offtake agreements are paid for and what their economic benefit is to the project, aside from the financial one, so that we can separate those two players and so I guess, Adam, this is a call out to you to having some standardized agreements where we are able to everybody understand what those commitments really mean, and how to be able to value those commitments, so we can have a really good discussion of what the financial how the projects are being financed how the term sheets look on a finance basis alone versus finance basis with offtake. And so this might be a little bit of a repeat, but I think that one of the key areas where we look at the funding is taking a look at how the premium is going to be paid for. So in reality, the SAF producer is exposed to their cost of feedstock, and then their cost of production, and that needs to compare with what the airline views. And so if they're going to consume the Jet A itself, then that's a pure substitution effect, and we know exactly what the value of that substitution good costs. Then they get the Scope 1 credit, or they get and this is purely on a voluntary in the voluntary market, but they get the benefit of having the environmental attribute retired, that they get to make that claim. And then there's also, again, in the voluntary market, the Scope 3 credits that a corporate gets to have. And what's become clear in discussing this with many of the participants is that, as we've kind of mentioned before, the airlines need to remain competitive, and they're not all airlines are going to enter into the voluntary market at the same speed. And so what we've seen is that while over the last year, where airlines were participating, let's say in kind of test volumes in the SAF markets, they were willing to pay the whole premium. But as we started talking about going and to really start to think about the competitive impacts of paying for a large part of that premium. And what becomes clear is that they are unwilling to pay for the whole premium, and that burden is going to have to be shared with corporates. In trying to set up a transaction, getting a transaction between a SAF producer alone and an airline itself has a huge amount of complexity with regard to logistics and getting fuel to point A from A to point B, transport, blending. It's a very, very complicated equation. Now we have a tri-party agreement whenever we want to do something. And so that's the producer, the airline, and the corporate. And so we need for the corporates to get involved. We need for there to be an easy way to do this. And book and claim, I think, is one of the easiest ways to do that. And so the good news is that we have, I think, a fantastic product for corporates. I think that we have, with the work that RSB and the other people in the ecosystem are playing, we have a chain of custody and traceability that is kind of second to none. We have great proof of sustainability, and we have these great book and claim and registry options that really help make it, and hopefully will make it very, very easy and transparent for corporates to get involved, and for them to put value in this Scope 3 product that will play a huge role in helping us to scale SAF. And so with that, Hannah, I'll hand it back to you.
Thank you so much, Liam, for that incredibly illuminating presentation. I certainly learned a huge amount. Thank you. As we head towards the top of the hour, I'm going to ask Max Eichelbaum, who is RSB's Digital Solutions Manager, to bring us back to earth with a demo of what book and claim looks like in action by taking us through the RSB book and claim registry. Over to you, Max.
Thank you, Hannah, and also welcome from my side to all the participants. Quick correction here. It's not going to be a demo. It's going to be an introduction to the registry. I think for a demo we wouldn't have enough time, but I'm happy to provide you with an overview and what the registry provides in terms of value to corporates and hopefully also to the financial sector. So please let me start maybe with a quick history on the RSB Book and Claim Registry. So we started to develop an Excel-based minimum viable product in November 21 to understand what are the data points, the features, and the interactions a tool needs to have to establish a book and claim system. And while working with industry partners on developing this Excel tool, we realized, okay, there's actually a need to a more sophisticated tool. So we started to develop a web application, and we launched it last year, November 23. We are very pleased to see the traction the tool or the registry had so far. We just made an announcement that we had our 100th retirement statement, and I will give you some further stats on what that means actually. So with that introduction, I would like to move over to the RSB registry website and kind of walk you a bit through the onboarding process and what it means actually for companies to use the registry and how to approach it. So for that, please let me share my screen. Right. I hope everyone can see now my web browser. So this is the registry that is online. Everyone has it. This is the public interface of the registry, which has an information tab and the public retirement table. If you log into the account, those tabs are going to be extended based on the role you have within the registry. So let me walk you quickly through the information page of the registry and how to approach the registry if you're in the market to diversify your emission reduction claims and looking for a more impactful solution compared to carbon offsets. So reducing emissions that are directly linked to your operations and a service potentially provided by an external company. So in the beginning of, or on the top of the information page, you have some general information of the registry, and access to resources. And then, I think the most three important most steps to you need to go through to. And the first one would be you need to have commercial relations or partnerships already with existing stakeholders. As Jill mentioned, the RSP Book and Claim Registry is a pure chain of custody tool. So we track the sustainability attributes and the underlying values that are associated to the physical sustainable fuel in the registry. However, there's no commercial information tracked in the registry, and that is all happening outside. So how to start the journey is you need to build those partnerships to make sure that either based on your position in the value chain, you have either access to the BCUs or you can sell those BCUs to end clients. And to give you the most simple construct is you have a supplier that registers the BCUs, issues the BCUs on a registry. Then you would have an airline that is the Scope 1 emitter, and then the airline would transfer the BCUs to a corporate end client, being a Scope 3 claimant. So those three companies would need to get together and find a commercial agreement before they start using the registry. When this has been all figured out, they can move to the next step and create an account on the RSP registry. There is a document that needs to be signed, and there are some particularities on who is doing what on the registry. So we have an account owner, we have account users, but this is something we will explain. I have explained on this page, but also help companies to better understand why they get onboarded. And then when the onboarding process is done, you're ready to issue, transfer, or retire BCUs on the book and claim registries. Maybe a quick overview of the accounts we have currently in the registry. So we have the supplier. The supplier account is the only account that can issue BCUs on the registry. This is also because this activity is audited. Our approach to the situation is the following: that we audit the information that is entered into the registry, making sure that there is no double counting happening. And then we audit the registry itself. And the assumption is if I have correct information going into the system, and I can assure that the system works correctly, then I can also be sure that the output of the system is correct. As you can see, we have other roles like the intermediary account. So companies that are already part of the supply chain, but not necessarily need to do the registration of the BCUs in the registry. So we have some middlemen. Then we have the transportation service providers, airlines, transport logistics providers, so freight forwarders, corporate end users, and then some more system-related accounts, such as the admin and the auditor accounts. As you can see, only the TSP, the TLP, and the corporate end user accounts can make claims in the registry. We are continuously updating the registry. So we are about right now to launch a new account role, a facilitate account that helps with the procurement of stuff for also smaller corporates to help them to facilitate the agreements among different partners. So this is something that is in development and testing and will be launched towards the end of the year. So we are also happy to see this additional account role coming online. As a final remark on the information page, you have all the resources down here. And I also like to highlight that corporate end users don't pay any fees in the registry. So as long as they have established relations with partners on the registry, they can join the registry for free and then retire or receive BCUs and retire BCUs on the registry. A quick look on the public retirement table. So this is public information. Everyone can access it. And the purpose of this public retirement table is to allow also auditors that do the audit for corporates for their carbon accounting to verify the information that is issued by the registry. So you have a corporate, they receive a retirement statement, and the auditor can verify that information on the registry with the public available information. Also here, important to highlight that the information available on the retirement statement, which we can see here, for instance, in an example with Alaska Airlines and Microsoft, is reduced to only the essential information of the BCU. So the registry itself has much more information for the underlying fuel, but yeah, we don't need to, or we need to respect a commercial interest and data confidentiality. So that information is reduced to the information in the retirement statement, and we hope that we get the entire market to a place where they say, okay, we trust the system, and this is information we only need to do our claims and simplify the entire process. Quickly, a word about the achievements we had so far. So we had 104 retirement statements. It says here on the retirement on the registry 99, but we're talking about, so those are related to the BCUs we have in the system, but in reality we had 104 retirement statements. Those retirement statements represent approximately 15,000 tons of neat SAF, which is equivalent to over 50,000 tons of CO2 emission reductions. And this is a difficult number to process, so we try to convert this into something more tangible. And those 50,000 tons of CO2 equivalent emission reductions represent 316 one-way flights between New York and London in a Boeing 767 with approximately 280 passengers, right? It's even an old airplane. I think with a modern airplane, actually, this number would be even more impressive. But, this equals 88,000 passengers transported across the ocean. So I think this is a great achievement so far, and we see, growing interest in the registry. So in the context of this webinar, just as a final comment, so Book and Claim is a strong sustainable fuel demand and supply enabler, providing a solution to today's complex sustainable fuel logistics. So with a strong traction and commitment we already have, we hope this will also help the financial sector to see this as a strong signal to build confidence and increase investments into supply chains. Thank you very much for your attention.
Thank you so much, Max, for taking us through the RSB registry. I am just trying to get the slides to come back up. Here we go. And I'm very pleased to thank you, Max, and all of our amazing speakers for all of your support, and to hand over to Tim to share some of the concrete ways for us to continue this journey together. So please, Tim, take it away.
Excellent. And Hannah, if you can move forward on the slides, that would actually be very helpful. So where do we go from here? I think so many times we can leave these types of discussions without concrete opportunities. And so we wanted to take a step back and share some ways that RSB can facilitate opportunities in the market. So first, if your team is looking to decrease their own Scope 3 footprint, I'd encourage you to investigate the registry option with RSB or other places to really facilitate that purchase. Catalyzing the market in this buying capacity is a tremendous step, and at this point is one of the lowest barriers. Second, if you're looking for how to expand financing or other transactions into these sectors, there's a lot of support that RSB can provide to mobilize the commercial opportunities within your own entities. The easiest connection is RSB serving as an unbiased connector between sustainability assessments required by financial institutions and the on-the-ground sustainability management of the projects being funded. RSB can help align standards, complete reviews, and build the infrastructure to unify all of these requirements. There are also opportunities for collaborative efforts in standard setting to make sure any guidance and frameworks are suitable for the finance sector needs. Finally, ongoing auditing and certification of current or potential assets help mitigate risk and build ongoing monitoring for future investments. And so, Hannah, if you go to the next slide. Overall, what makes RSB particularly unique is the convening of all stakeholders to drive the best outcome. So customers, suppliers, NGOs, academic institutions all come together to develop cohesive and reliable frameworks. There's no better opportunity for that than the upcoming conference in December at Geneva, where sustainable finance initiatives like these will be the primary focus. We encourage everyone to join us to continue this dialogue and create new ideas to catalyze more financing within these markets at a critical scaling inflection point in the fight against climate change. There's also a discount for folks that have participated in the webinar, so please see it on the slide there, webinar 20, and make sure to take down the code or use the QR scanning on the slide here. So thank you again for taking the time to join us, and we hope you enjoy the rest of the day.
Thank you so much, Tim. Thank you so much to everybody who has joined the webinar, has participated. I didn't see anyone with questions in the discussion, but please feel free to also reach out to RSB and the team. And I would like to thank Elena, Tim, Adam, Jill, Liam, and of course, Max for your fantastic contributions to this session today. And we look forward to continuing the discussion and seeing many of you here in Geneva in December. Thank you all so much, and goodbye.